Tesla stock sold off about 2% today, and I will explain exactly why that is. We will also go over, did you miss the boat for Tesla? Did you actually miss the lows? Or is Tesla stock destined to go lower? And we do have some pretty major events coming next week, including the Fed and important economic data that will have big implications for Tesla also. And I will give you the rundown of where we sit, because I think it actually is a pretty good setup for Tesla. Now, I don't want to jinx it. I'm going to knock on wood here. But I think it's pretty good setup. So let's go ahead and get into it, guys. Hit the like button and subscribe to the channel if you found your way to the video and this video provides you some value or you just like different opinions. Hit that like button and subscribe, and let's go ahead and get started. So first things first, Tesla stock was down about 2% today because two U.S. senators want Tesla to restrict their Autopilot use. Now, they're not asking Tesla to do this. They're asking the National Highway Safety Transportation Administration if they will do this. So it says right here, Democratic Senators Ed Markey and Richard Blumenthal said the National Highway Traffic Safety Administration should require Tesla to restrict its Autopilot feature to the roads it was designed for. We urge the agency to take all necessary actions to prevent these vehicles from endangering lives. Now, there was the first report that came out that says the Auto Safety Agency said on Friday it is opening an investigation into the adequacy of Tesla's December recall of 2 million vehicles to boost Autopilot safeguards. So, a bit of a nothing situation, standard kind of, highway safety, traffic, blah, blah, blah. It investigates everything, okay? This was standard. But now you have two U.S. senators that are calling on the blah, 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 National Highway Traffic Safety Administration to essentially limit Autopilot. And I think that is really what is dealing the blow, this 2% blow to Tesla stock today. For a plethora of reasons, I believe that's not going anywhere. Autopilot FSD is here to stay, especially if it continues to become safer and safer and safer. If there was a time to maybe do something like that, I think it was a long time ago. Talk 2020, 2021, when FSD was not nearly as good as it is today. So I think that's a lot more bark than bite in all reality. And I think the stock will get over this pretty quickly. I mean, give it a day. Like coming next Monday, we're not going to be responding to this at all unless there were to be like more senators calling for this, but I don't forecast that as happening. So if there is a reason why Tesla stock falls back to the lows, it's probably not going to be this. Now, a big question I have been asked over and over again is, did I miss the boat in Tesla? Did I miss, one of the best buying opportunities for Tesla stock since you were at these similar levels back in early 2023, about a year and a half ago? Did you miss this opportunity? Well, I'm going to say this in a way because nobody knows what's going to happen, but something big happened on Tesla's earnings call. Instead of, another disaster, instead of more uncertainty, instead of, a gap of growth, Wall Street was expecting Tesla's going to delay for a while the cheaper models and instead focus all their efforts on robotaxi, which is going to take a couple of years to become, an actual product. That's Wall Street's mentality. That's big money's mentality. So thus, there could have been a multi-year growth gap where Tesla trades at growth like multiples. You need to have growth, and that's obvious. Tesla did, in fact, the opposite. They said not only is the Model 2 not canceled, we're going to expedite it as fast as possible. Maybe even by the end of this year, we could be shipping out Model 2s. I'm going to call it a Model 2. I don't know if it's just going to be a, smaller battery pack on a Model 3 or what it's going to look like. And I think we'll have a little bit more clarity on that coming on August 8th. And keep in mind, Tesla said models. So that did imply multiple different lower priced vehicles could be coming. And that's what Wall Street has wanted from Tesla for a while now. Now, you also have other segments of Tesla's business firing full steam ahead, like full self-driving. You have the energy business. None of that is really credited by Wall Street all too much. In the future, the energy business will be a very big deal, but not right now. So really, my point here is the narrative has changed to such a degree that I don't think you're going back to the 130s or the 140s anytime soon. Now, with that said, that's kind of only including Tesla, right? In that argument, I'm not talking about the economy. I'm not talking about the Fed. I'm not talking about anything else. That is solely on Tesla. Like, in other words, I guess. I don't think it gets worse from here as far as news, as far as sentiment, and outlook. Right. I think you would have to see something very dramatic happen for the sentiment to go as low as you were before Tesla's earnings. So minus anything else, I don't think Tesla's going back to the 130s or the 140s. With that said, you have the Fed, you have an economy. Those are the other two things to contend with. And I think eventually, give it some time, there will be another crash. I don't know when that's going to happen, and that's hard to predict. It could happen this year. It could happen next year. It could be 2026. But inevitably, you will have a chance to probably buy Tesla stock in the 100s at some point in the future. Yeah. So if you're a long-term, buy and holder, sure, you're probably going to have a better chance to buy Tesla stock. But you're probably going to make some money on paper in the near term. I do think Tesla stock could go in the 200s or 300s and then see a big crash. There will be a big crash again. That's my point. You didn't forever miss the boat. You forever miss the boat when the robotaxi network launches. So from now until the robotaxi network launches, you didn't miss the boat. In those terms. In the short term, yeah, probably. Now, in the short term, I think there's still a lot of opportunity in Tesla. You're only at $167 today, and from the high of the day today, you're down over 2.5%. So you got a 2.5% little discount if you wanted to go out and buy Tesla stock today. And I do think, again, part of why these two senators kind of calling on Tesla or the National Highway Traffic Safety Association to make these rules for Tesla is coming off a little worse than it otherwise would have, because Tesla stock has rallied so much in recent days. Like, if Tesla was sitting at the lows in the 130s, 140s, I don't think this news would have affected Tesla at all. I don't think Tesla stock would have reacted to it, but it did today because you have rallied so much in such a short amount of time. So that's also something to consider. But I think that's just overall, bunch of BS. I do think right now is still a really good time to buy Tesla stock. After all, I was buying Tesla in the 170s, 180s, 150s, 160s. I've been buying Tesla stock the whole time, but I was buying Tesla stock recently higher than 167. And, in fact, it's still looking pretty dang appetizing as of right now. And, I invest in Tesla for a very long time. My time horizon is 10 plus years. So from my perspective, I'm okay waiting until we see another big crash again. I'm okay buying more now. It just really doesn't affect me. But I think you have to really think about, do I need this money in the next couple of years? If you need the money in the next couple of years, then I probably wouldn't buy Tesla. If you can set it and forget it for 10, 20 years, if that's the mindset that you are in with whatever capital you're looking at, then you'll be just fine buying Tesla stock. And I do think the future is very bright for Tesla. But again, when you do get crashes and down moves in markets, stocks, they react very emotionally and irrationally, and they can fall a lot more than they're worth. That's why the Rona, if you guys were invested in the markets during that time, it was like free money everywhere. You were buying stocks at crazy discounts, and then they would recover the next week and sell off the next week. And then once it really recovered, it really took off. And stocks did well if you bought stocks during that moment in time. But there could be another, circuit halt on the market someday. And, that theoretically could happen tomorrow. So I wouldn't say you missed the boat here. But definitely in the near term, I don't think you're going back to those prices. But I still think, right now is a good price. And really, if you think about things logically, a lot of people were calling for Tesla to go under $100 per share. Now, yeah, sure, Tesla is not in the 140s or 150s anymore. It's in the 160s, almost 170s. But you have a little bit more information, knowledge, and confirmation of, Elon is in charge of this ship. They are doing things to create value for shareholders. I think the confirmation of that alone really de-risks Tesla in that term, right? Because anything could have happened before earnings. Me and the next guy, whoever else that was buying Tesla stock before earnings, we knew that risk going into it. So I actually think it was probably a smarter choice to wait after earnings. So if you didn't buy before earnings in the 130s or 140s, I think you actually made the right choice. I actually think you made the smart choice. So I'll just leave that there for what it is. But we do have some major events coming next week as well. And the Fed, the economy, these are things that will affect Tesla stock also. Now, as I said in the beginning of this video, I do think that is a kind of tailwind thing for next week. And I'll explain why that is. But let's start with Monday. There's really not much. And I'm just looking at big events for this upcoming week. We're not going to look at everything here in this video. We'll do that over this weekend because there's going to be a lot of smaller pieces of data as well coming out. But your first day of big data next week is Wednesday. You have ISM manufacturing PMI and JOLTS job openings. Again, you want to see the economy as strong as possible. You want to see the labor market as strong as possible if you're in stocks today, because that's the whole thesis. Markets are going to be strong because people are spending money. That's going to drive EPS growth, blah, blah, blah. You already know the shebang. You don't have inflation falling anymore. You don't have the Fed that's going to give us massive rate cuts. None of that is supporting the markets. It's all on earnings. Now, you do have the Fed coming on May 1st. That is next Wednesday. And I will say, we're probably going to get an announcement of the balance sheet reduction. Now, I've pointed this out before, but I will, point it out again. If you look at something like a TLT, right? This is the 20-year Treasury ETF. The Fed reducing the size of their balance sheet is adding supply to treasuries. The Treasury is also adding supply to treasuries because they're selling treasuries to fund the government's spending habits, and they're spending like they are drunk. So there's a lot of supply hitting the treasury market, and that's why, as you can see here on the weekly candlestick chart, treasuries have just continued to slide, and they're even falling more so recently, right? And the Fed may be slowing down their runoff, could add less supply to treasuries, which could cause treasuries to rise. Treasuries rising means the yield is falling, like a dividend stock, right? If you buy a $100 dividend stock that pays you $5 a year, fantastic. That's a 5% yielding dividend stock. Good for you. As long as that's a quality company, that's probably a good investment. If everyone wants to buy treasuries, which would be represented, or buy that stock, aka buy treasuries, like if there's a little bit more demand than supply for your new dividend stock and the stock goes to $200, then you only get paid 2.5%. Same logic here. If there's less supply to the treasuries, maybe treasuries can go up, and maybe that means yields will fall. And 10-year treasury yields being at 4.7%, 4.70%, hitting a new high for 2024, I do think heading into the next Fed meeting, there is a chance that the balance sheet reduction news, I'm sure we're going to get more news on that, if not the start of the balance sheet reduction, that could be positive, as well as the Fed just reiterating they plan to cut rates multiple times in 2024. If you take a look at December 18th over here on investing.com/Fed rate monitor tool, there's a 39.0% chance of one cut, 29.9% chance of two cuts, and 18.9% chance of no cuts. So markets are pricing in one cut in 2024. And we did just recently get the GDP data that came out yesterday, actually. And it or maybe 2 days ago, it came out about 1% lower than expected. And that's the first number, right? We were expecting 2.5%. It came out at 1.6%. The next two revisions are probably going to be even lower than that. And I think the Fed can start to say, hey, the economy's weakening a little bit. You're now under your 2% trend growth for Q1. We may want to start reducing rates. And I don't think the markets are factoring that in at all. And I think since you're only pricing in one cut, you're in a really good spot heading into next week. Like the Fed's not going to say, hey, we might need to raise rates. I don't think the Fed's going to talk about raising rates. And I think the Fed's under a lot of political pressure to start reducing rates as well. So, maybe if we were pricing in like 3 cuts heading into next week, this would be a different story, but you're only pricing in 1. So maybe there's a chance for more cuts to get kind of priced into the markets following the Fed next week, which will be positive for, you guessed it, Tesla stock. Now, it'll also be positive for the Russell 2000 interest rate sensitive companies as well. So there is that. Thursday, you really don't have much. And then Friday, you are going to get the non-farm payroll number. You're expecting 210,000. Again, the GDP numbers didn't come in nearly as hot as we thought. I think if we get surprised with a downside number on payrolls, it's probably not going to be seen as a positive, but just coming in a little bit lower than estimates, like 190,000 jobs, 180,000 jobs, when I think is possible, that would be seen as a big positive. You also have the unemployment rate expected to be 3.8%. So a little bit of weakness in labor markets may be good news because the Fed would have justification to start lowering rates multiple times in 2024. A big miss on payrolls or unemployment would be seen as a negative. Why? Because the narrative in the markets is people are employed, full employment, people are going to spend money, and that's going to drive S&P 500 earnings growth. So those are kind of your major events in that sense for next week. Now, you also have a ton of earnings. You're really getting into the thick of it, if you will, with earnings. Monday, you have SoFi, onsemi, Domino's, pre-market, after hours, Paramount, NXP, Logitech. Tuesday pre-market, PayPal, Eli Lilly, 3M, McDonald's, Coca-Cola. Tuesday after hours, Amazon, AMD, Supermicro, Starbucks, Pinterest. Wednesday pre-market, Pfizer, CVS Health, Barrett Gold, MasterCard, Norwegian Cruise Lines, Kraft Heinz, Estee Lauder, Marriott International. Wednesday after hours, Qualcomm, Devon, Paycom, Carvana, Fastly, Etsy, Sonova, and Albemarle. Thursday pre-market, Novo Nordisk, Peloton, Moderna, Penn National Gaming. And then Thursday and after hours, you have Apple, Coinbase, Block, DraftKings, Cloudflare, Amgen, Bookings, and Expedia. And then Friday, you have Fubo. Shout out not to Fubo. Holy crap, that stock has done terrible now in 2024. It's down like 50%. I think it's got Tesla beat by far at this point for the drop in 2024. But nonetheless, you are going to get Amazon and Apple. Now, I think Amazon's probably going to come in with some pretty good numbers. I'm not concerned about Amazon as much as I am concerned about Apple. Now, keep in mind, though, if you have Microsoft, Google, let's say theoretically, Amazon, Tesla, those other big tech names that gave you good earnings or at least a good forecast, I don't think Apple's going to be the stock that could ruin it all. Okay, so I think Apple can kind of do what Apple does without it ruining the markets per se. Apple's been falling in 2024. The rest of the markets have not been, or at least the index, S&P, and the NASDAQ. Now, I will say, though, Supermicro and AMD, those are going to be interesting for the broader markets and the whole AI theme, because what you've seen, like, a week and a half ago when this sell-off really started to kick in full steam ahead. It was the day that ARM was down like 18%, SMCI was down like 25%. Over the past 2 years since 2022, Supermicro has always came out, confirmed their earnings day, and pre-announced their earnings. Like, hey, we're going to beat by a long shot. They did not do that this time around, which has a lot of people fearful that maybe those numbers are going to come in not so good. And I think that's going to be a big story for the markets to watch on Tuesday, because we aren't going to hear from NVIDIA for still a couple of weeks. And I hate NVIDIA reports at the end of earnings season, because it's like, do any of these earnings really matter if NVIDIA falters? I don't know. Now, again, as I said in the last video, you want to stay above your 20-day moving average and you want to get above your 50-day moving average, the yellow line and the purple line. Whichever one comes first, that's going to give you a little bit more clarity to where we go next. It doesn't surprise me, Tesla stock's kind of consolidating after the last couple of days of big gains. But I do ultimately think Tesla stock goes higher. I think the Fed's going to be a little bit more dovish now that we did get that bad GDP report based on expectations, right? Coming in about 1% lower than expectations. Core PCE today came in line with expectations. That was seen as a win as well from the markets. So for those reasons, I do think Treasury yields fall, and I think the markets are pricing in a pretty hawkish Fed, which could set you up for an upside move from here. And I'm still going to stick with my target in the 180s to 200s. And I do think Tesla stock could rally all the way to that 200-day moving average, around $222 per share. I think above your 200-day moving average, if we just want to be honest, I think it would be a little bit premature if we're not expecting the new vehicles until the end, probably the first half of 2025. I think it would be premature for the stock to rally more than that unless the Fed did commit to, lots of rate cuts or something along those lines. But at that point, is the economy in a bad place? Probably. So I do think to some degree your upside's limited around that 200-day moving average, around $220 per share, but that would still be one hell of a move just to get to that 200-day moving average. And if next week is bad, well, Tesla stock could easily fall back into the 150s. I mean, you're already at 167, but I do think the overall narrative has changed. And, shout out to you guys, really, if you waited until after earnings to get confirmation, because I think that was probably the smartest way to play it. Now, I made money on Tesla options, made a bunch of money on Tesla options. So did the trading community. If you guys want to come join that, check out the link down below in the description of this video. Nonetheless, that's going to do it for this video. Again, I will reiterate my longer term view by the end of this year. I do think Tesla stock can be $300 or higher. Based on we should be getting more cuts in 2025. The earnings comps on a year-over-year basis are going to be really dang easy for Tesla. And as you start the new, production of new vehicles for Tesla, all of that's really good. You're going to have the Robotaxi event August 8th. We don't know exactly what's going to be said there, but we can speculate that, not too long after that, maybe a year after that, maybe end of 2025, Tesla could be targeting some small launch of a robotaxi service. Maybe, San Francisco or Nevada first, right? Kind of like a Cruiser or Waymo, but that can also lead to a lot of optimism. And I think in 2025, if you just look at what Big Money is doing, how they're positioning, Big Money thinks Tesla stock could be $400+ per share by the end of 2025. So I don't think that's too unrealistic as well. But nonetheless, guys, let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.